Business loans versus business credit lines. Which one will win? That's exactly what we're going to dive into in this training. We're going to talk about the difference between loans and credit lines that you need to know so you know when to apply. Look, you know what a loan is, you know what a credit line is, obviously, but the question is when does each one work best for you in your business? As a matter of fact, which one is easier to get in each stage of your business? We're going to decode all of that in this training. So when you go to apply for financing, you know exactly the type of financing that you actually want to get because you know what works best for you. There's a lot to dive into on this topic. Let's get started. All right, so let's start with business loans. Let's give us a breakdown. So the things we know about business loans that are obvious is that they're based on a set term, right? They're not a credit line or a credit line where we could use it and reuse it. So business loans have a set term of when we're going to pay that money back. So that means that it might be 3 years, 5 years, 10 years, 15 years, but whatever that term is, that's going to actually determine our payments. Now, business loans can work very well if you get longer terms, and that's the key. I see so many business owners make the mistake of wanting to know about interest rates. Interest rates don't matter. Interest rates are based on risk. If you want a lower interest rate, lower your risk, right? Improve your personal credit, your business credit, longer time in business, better cash flow management, all that stuff, blah, 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 right? So there's a lot of things you can do to control risk to lower interest. But what matters more than interest is term. Because if you have a longer term, even if it's a higher interest rate, your payments will be less. And that's what we care about. We want to keep our payments as low as possible. We write off all the interest on our taxes. We get all that back anyways. What matters to us is keeping payments low. And so in order to do that, we've got to get the longest term. So when it comes to choosing between business loan or business credit line, well, one of the big questions is what kind of loan can we get? If we get a loan through cash flow financing or merchant cash advance, these can be 6 months term, 12 months term, 18 months term, very short term, very high payment. But if we can get loans through term loans or SBA loans, well, then we get longer term loans and very low payments. So that's one of the things you want to look at is that how long of a term can you get? And that's going to be based on the type of funding program you can actually get approved for. Cash flow financing versus SBA loan, for example. Another thing to keep in mind with loans is that your payments start almost immediately as soon as you close. Within 30 days, your payment's going to typically be due. So that means that if you're going to get money for something and you're using that money to be able to apply it to start getting a rate of return that you're helps offset that loan payment, you need to put that money to use right away. The minute you get that loan, the pressure is on for whatever you're using that money for to start actually producing so you have that extra money to start making those loan payments. So something to think about. If you're going to apply for a loan, how ready are you to take the money, put it to action, and how soon will you start to get a return on that money? If that's important for you to be able to easily cover those loan payments, you need to be ready to go before you even apply. And if not, if you need more time between having the money and putting it to use to making you money, then you probably want to consider revolving credit instead. It's an easier choice. So these are some of the most important things to keep in mind for a loan. What term are you going to get? Depends on what kind of loan program you're looking for, and also making sure you're ready to put that money to use right away because your payments are going to start right away, and you want to be able to cover those payments as much as possible by getting a return on investment for whatever you're using that funding for. So the next question is, when do you use business loans? When are they best used? Well, first of all, larger purchases, business loans make a lot of sense. You typically cannot use revolving credit for a major purchase, right? There's a reason that automobile loans and mortgages are set terms because bigger purchases really warrant loans versus revolving credit. So if you're making a bigger purchase like a piece of equipment or a piece of real estate or something that costs thousands or tens of thousands of dollars, typically a loan is going to be better suited for you. Another huge benefit of a business loan is that it's predictable terms. You know what your payment's going to be. It's not going to change month to month. So this is something you want to think about when you're looking at what you're using that money for. If you need the payment to stay consistent, you need reliable terms, you want it to be the same, then a business loan is obviously better than revolving credit because your payments are going to be all over the board when it comes to revolving credit, depending on how much credit you actually have outstanding that you owe on. So those are some of the things to think about when you're considering a business loan and some of the reasons you may want to consider getting a business loan to begin with. Which brings me to business credit lines. The biggest benefit of business credit lines is that they're reusable. You could use them once, you can pay that down and then reuse them. So that's a nice thing about credit lines. Is with credit lines, you're able to spend $5,000, $10,000, pay off your $5,000 and $10,000, and then have that $5,000 or $10,000 to reuse. So revolving credit is a very important tool, especially if it's used alongside of loans. Use loans for all the big purchases, keep your payment stable. Then get credit lines and revolving credit to use for things that you can easily buy, then pay it down, and then reuse that credit as you need it. This is very important credit to have, especially when the economy changes. Because when the economy changes, you want to stop spending cash, rely on your revolving credit to pull you through until you make sure that everything is stable. This frees up more cash to deploy, more cash at your disposal. And look, you can use it for general survivability to be able to keep employees employed, but you can also use it to take advantage of opportunities to acquire new businesses, acquire new talent as well. The key is to make sure that you use revolving credit wisely. This is best to have for when all of a sudden something comes up unexpected that you need to use that money for. You're in an office, the air conditioning breaks, or maybe the opposite. Maybe you started to run an ad on Google and the ad had massive results. Now you want to immediately scale that ad and bring more money in the door. There's so many opportunities where all of a sudden you need cash, and this is a great use of credit lines and business credit cards. So when do you use credit lines? Well, everyday purchases, revolving credit makes sense. So you might use business credit to buy office supplies or fuel for vehicles or construction materials you need for a construction business, anything you're just doing regularly. You can also use it to offset cash flow concerns. So if less money's coming in this month, you might want to keep more cash on hand and more money in the bank so you can shift your expenses to credit lines or credit cards instead of actually taking money from your business bank account. It's also good for larger purchases that you're just expecting a shorter term to pay back. Okay, so I talk to clients that sometimes want loans and they say, look, I just need no prepayment penalty. I'm going to pay it off in 90 days. Well, if you're going to do that, then get a credit line. You don't want a loan for that. Get a credit line for that where you can actually make that purchase and then you can pay it off in 90 days and reuse that credit. So if you've got larger purchases with shorter terms you're expecting to pay back, it's another great use for business credit lines and business credit cards. So here's the reality of all this. You need to make sure you have both. Both loans, credit lines, and credit cards have their own unique purposes. And if you really want to grow a successful business, you should be tapping into all three of these sources of financing. You should be using business credit to cover a lot of your day-to-day expenses and pay for the majority of stuff that you need to buy without relying on loans and credit lines. You want to use loans for larger purchases because they have longer terms and again, typically give you lower payments on those bigger purchases like equipment or like real estate or anything else you need that might be thousands or even tens of thousands of dollars. And you want to use credit lines just for basic day-to-day cash flow management and to take advantage of opportunities as they arise. There's a lot of uses for each of these types of financing, but the most important thing you need to know is get all of them. By getting them all and stacking different kinds of financing, not only can you get more money, but you have the ability to navigate more uncertainties with this kind of financing at hand. Want to learn more? Want to get approved? Well, check out the link in the description of this training. You can go to creditsuite.com/get funding, and at that link, you can get pre-approved for financing right now. Like same day, we'll be on the phone telling you all the financing you can get approved for. You also want to check out the link in the description of this training for a free finance assessment. On that assessment, we'll talk to you about all the financing you're able to qualify for right now. I assure you, it's probably a lot more financing than you ever even thought was possible or available. But you're only gonna know if you get your free finance assessment. It's in the link to the description of this training. If you got value from this training, make sure you like and subscribe and keep your eye out for our next training where we talk about more cool ways to get the money you need to start and grow your business.